Welcome to Trading Lounge and the gold report for Friday, September the 17th. And as you know, we're tracking two counts. One is the triangle pattern from wave 3 here with an A, B, C, D and E wave here as wave 4. That is the descending triangle. The other one is the irregular flat where we have an A wave, a B wave and a C wave here, then up for 1, back for 2 and then heading higher. So that's what we're looking for at the moment. And as I've probably mentioned, it's going to take a little while before we get to a point where we can recognize one move over the other. So let's move in and have a look at the irregular flat, which we can do on the daily chart. So the A wave, the B wave and the C wave for wave 4, and then 5 waves up for wave 1, and then we were looking for an ABC pattern to come back. So we're still on track here with all of this, so I'll just clear that up there. And obviously we've had that sharp drop there, which is a little bit sharp for a wave C. I would always expect wave C to be a bit lazier. That's the 61.8%. I've had a quick look at the move down and we'll go over that in a bit of detail, but we're still looking for that kind of move to come down onto that low. So we don't really want to buy on the low here. We want to really get some evidence that we're actually in a trend up. And in both cases, be it the irregular flat with wave 4 being in place here, or play, I guess, or the triangle pattern, they'll be the same. So wave 1, 2 and 3, or for the triangle will be an A and a B and a C wave. So we still have further to move with these, just on the 4-hour chart, which I haven't updated, so I'm just sort of working on the hop, just running a bit late. But yeah, so in this case we've got the all the way up for wave 1, and we're looking for the A wave, the B wave and the C wave, as you know. And yeah, we need to pull that apart, which we will do on the tick chart, but we need to give that a bit more space. I'm thinking that we still need to go 4, 5 to come down into that space. We don't need these here. So we need this to land, and in the next video, in the next session or so, that will be sort of finishing off here a little bit. So in the videos ahead, we'll be looking, we do the videos just about every day, unless I don't do a video unless there's like just going sideways in here and there's no movement in there, you know. But if you remember, you can always get a trade check, just email me. So we're just looking for that clear impulse wave to the upside, and then we'll talk about the setup pulling back to move up there. But I would have really liked to seen this being a little bit lazier here. So because it's moved sort of sharply, it kind of reminds me of a wave 3, and it kind of haunts me a little bit, because if we have a look at GDX, so with GDX here, we've been looking at it, where are we here? So let me just get this into play here. So an A wave, a B wave here. We don't need that wave 1 there anymore. If I can just get rid of that. So we've been working this move down through here. I've been looking at it as a wave B up here down to a wave C, which is, you know, a fair way down. And, you know, this is just, to me, the GDX is really just the same as ABX, you know. So obviously this would create a stronger US dollar as well, I think, and we're just toying with that. So you can have a look at the Australian video to have a look at the DXY or the wave count on that, or you can see it on our website with the charts and so on. But yeah, the DXY, it was support on 93, not just trading above it, but a classic trading levels pattern as a tested support on 93 for the DXY would create a stronger US dollar. We'll take it up to 95 at that point, the next level. In doing that, we would see the weaker commodities come into play. So that's what's occurring at the moment. So last time we spoke about this, we had wave 1 here and 2 here, and then we're looking down for wave 1 and 2. But the important point now is that we've taken out that low there, so that creates out. So this would be 1 and 2 and 3 here. So it's going to take a while to dance around 30, which is a major trading level, and get to the other side. So we'll just see how that plays out here. Could we count this any different down here? Yeah, we can go into the WXYs and things, but that would just leave us in a bit of a nutshell. It would still leave us with wave 3 here, and then I still haven't mastered this platform. So this would be 1, 2, still need wave 3 to be longer here, and wave 4 and wave 5. So the best case scenario would be getting to wave 3 there, I'd imagine, and we can look at this in a different light at that point. But otherwise, we'd just be looking further. Once that 30 becomes the retested resistance, and it'll take a while for it to do that, but once it does that, then we have to look down at 25. Of course, there's 28 in there as well, so we can put that in there. That's an important level. But there you go. So yeah, bearish on those gold stocks, creating this particular market there. Getting back to this, so if GDX has got further to go down, well, it would be likely that this has got further to go down. So in a way, this is where we really need to be careful. You know, we can't believe, you know, everything I say, because it'll just get us into trouble. Oh, not that one, it's this one. So we also need to consider this move down here, the speed at which it's gone down, you know, is quite typical of a third wave. So in this move back up here, we just really got to be careful that we're not going to get pulled into some fourth wave here, and we've got something else going on here, because this has moved down quicker than wave A here. Now, it might be just a piece of news or whatever. I mean, we're expecting it to go down, but, you know, it came down pretty fast. I was hoping for a lazy C wave, you know, but to get that sharp move down there, it's like, oh, God, it didn't really go according to plan. So now we've got another layer of security measures to put into place that, you know, because we don't want to see that we get, you know, 1, 2, 3, 4, and 5 down here for this thing, because then we're going to have a correction after that and have another 5 down. So there's a lot at stake here. But as always, we just work through step by step and look at all the options, and, you know, and whatnot. So where are we? We're in the expanded flat. So we're in the, not the expanded flat, the regular flat. So we're going to come back out and go back to the triangle pattern. So with the triangle pattern, we've got the A, the B, the C here, and then we're looking for an A and a B and a C for the D wave, and then the E wave over here somewhere, right? So that's where we are with this. So we can just tidy this up a little bit. We've had our ABCs for breakfast, and now we're just going into the big daddy B wave here. Hopefully. Let's just double check on a few things. From the top to the bottom there, we're looking at the 61.8%, and that's at 1730. So 1730. So that's 2-day. I had one on the 6-hour here, I think, for this. Not that it's a big deal, but it's just good if we update things as we go a little bit. So that's all good. Just clean that up a little bit. Bring the cavalry down. This is some sort of wave 4 and wave 5 here. That's what I'm thinking. For that, and then the 2-hour chart, I think we had that on the 2-hour chart. That was there. Don't need that, and that. Don't need that, don't need that. Bring that across. put that there. Obviously we didn't update this last time, so we need some bean counters, so that can be there, that can be there, that can be there, and then down here for this one. Because the extension's in wave 3, that means that wave 1 and wave 5 can be roughly the same. But still, we need to so yeah, look, even when this lands here, this will be a whole process here. We could, you know, if the timing is right, I could buy you right at the low here, you know, because we'll get 5 waves in this wave 5 here, and we could get in the 5th wave, there'll also be 5, so we get the 5th of the 5th and buy on that low there if you wanted to. But we could just be rallying into a 4th wave because of the speed at which this come down at. So we'll be very mindful of that. And so now it's into the tick chart. What do we need here? Is 20 enough? Yep. So the other day we discussed that we'll probably be in a wave, looks more likely we're in the triangle pattern rather than wave 1. So I've dulled wave 1 out for the irregular flat, because if it was a wave 1, then the move down here would be, well, swift and sharp like it is, but the wave, if this was wave A and wave B, this is just a bit time consuming in here for this. It's bigger than wave A, so that reminds me that we're probably in a triangle rather than a simple zigzag of 5-3-5 structure, even though we are in a 5-3-5 structure. But the time it took to do the B wave here is more in line with the corrective world, and it is corrective as well. I'm not really explaining myself very well here, but yeah, if this was a wave 2 pullback, this wouldn't be so big and cumbersome in here. That's what I'm trying to say. I don't even know if that's right. Now, I did have a quick look at this. We did wave 1, 2, 3, 4, 5 yesterday, and then we're looking for wave 2. I was looking for it to pull back a little bit higher to retest the 18. That didn't happen. So I'm still going to leave my wave 2 here. I did quickly just go over this before I did the video, but it's my first draft, so I'll need to double check it. But as it stands, I was thinking from wave 2 up here that we have wave 3 here, and then we would look at this here as 1, 2, 3, 4, 5 for 1 and 2. I pulled that apart for 5 waves for 1 and 2, and blue 3, 4 and 5 for 3 and 4 in here. And then looking at it's just good to go over it a little bit. We can see the last lot here, 1 and 2 and 3 and 4 and 5 in here for that. Is it possible to go here? We'll go back a little bit then. Okay, so well, from this wave 2 here, we got 1, 2, 3, 4, 5 here. Low wave 2, we had low wave 2 up there, and then I've got wave 1 here, so you'll need to figure that out, I guess. Wave 2, sorry, wave 1 and 2, and 1, 2, 3, 4, 5. Quite good form for the 3rd and the 4th, for the 3rd. Well, because this is the 3rd of the 3rd of the 3rd, so a 4th and 5, the 3rd and 4th, and the 5th in here. So, and then the last 5 down here. I'll need to double check all of that. But if that's the case, if that's correct, if we've got this wave 3 here, then we'll need this as the A wave and ABC for the B wave here. Haven't really checked that either. And the 38.2% retracement level will be at the 1765. But anywhere up there would be fine in that regard, so just be a little bit careful about that. We're just looking for 5 waves in this space here, so somewhere up like that. So we've got to get that, and then we've got to get 5 waves down here. So if I just clear this up for a moment. So we need 5 waves up there, and then we'll need 5 waves down here for this as well. So somewhere down into the 1730 sort of area. Maybe even the 1720, the 72. It always comes into play. That number there can be good. Anyway, we'll just count our curds and ways, and we'll just get down. And then we need to talk about going long at this point. So if I do a video and we're in this space around here, I'll keep an eye on it, then I'll try to get the low for you. But otherwise, a more sensible thing to do, well, I don't know if it's more sensible or not really, but we want to see the first impulse wave up. Now, it could be just that first impulse wave, and we could set up in that, you know, that would be one way to go. The second way to go is to get the third, a bigger pattern, and then look for this one, and then go long here. If you do go long here, make sure you keep the stop underneath here, because I'll be trying to grab it here, do you know? Much safer. So better off putting less money in the market and putting the stop out of the way, and then we'll wait for this impulse wave and ABC and then go back into here, and we'll just keep building like that. We've got to get that first, because the other thing we've got to be mindful of is that if I can just make some assumptions here, you know, after looking at GDX, if we take this down to 1730, let's just use 1730. So 1730, that's the 38.2% retracement level. So let's just put in a few things here. I probably don't need to worry about this too much, but just the speed that came down has just got me sort of a little bit jittery. So wave 3 here, and the wave 4 here would be at the 38.2% retracement level. So I'm just going to make that a little bit smaller and make that a bit smaller. So yeah, that 38.2% here, if that pulls down to there. So it'll be something like this. I'll just put that in there and put that there, right? Because it'll be something to do with this wave 4 here and this 38.2%. It'll be something like that. Do you know what I mean? Somewhere in that space. So we need to see if we get an impulse wave to this space here where the wave 4 should be, then we're okay. But if we only end up with 3 waves to this space, well, then that wave 4 holds more weight at that point, you know. And this wave 4 will look a little bit like this wave 4, but this wave 4 should be 60% bigger than this wave 4. Doesn't always pan out, but that's the starting point. Okay, we could have a quick look at silver. Obviously that's going to be bearish too, so we did talk about that yesterday, or was it yesterday or the day before? So we could look at this as 1, 2, 3, 4, 5 for 1 and 2 here, then 1 ABC for 2 here, and then the drop here 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave, fourth wave, fifth wave. So this needs to work lower. That's what I'm thinking. And I think it's a pretty good case for this too, because the speed at which this fell out of bed, and we talked about shorting it if you wanted to short it there, but yeah, you can keep the stop just above the short position. It should be okay at that point. But yeah, this is just joining the dots here. It's just got a little bit more to play out down here. And it's that. Alrighty, I'll leave it at that. So we're on track. Yeah, so all is well. Okay, cheers.